Eric, last episode we talked about the game of chips, and it has been an action-packed scene since then. We've got OpenAI taking $100 billion of investments from NVIDIA, and then turning right around and buying $100 billion worth of chips from NVIDIA's rival AMD. And you are going to be announcing 2 new portfolio recommendations. I am really excited to get into that. All that and more is next. Eric, I wanted to do a portfolio check-in and a little bit of the state of the market conversation here. So things are increasingly volatile, but everything is at all-time highs. We were texting each other earlier today. Like, this is like the everything rally of a couple of years ago. You've got gold at all-time highs, stocks at all-time highs, real estate to some extent is still hanging on at all-time highs. It looks like everything is absolutely ripping. But talk to me about where the portfolio is today, and then do that in the context of where the broader market is.
Yeah, not a lot of pain being felt across the broader market today. And, there's a little more volatility that's popping up right now, but that's to be expected when every single day you're waking up to a new $100 billion announcement, right? This is not normal. Overall, though, the portfolio, it continues to do quite well. We had a few drawdowns since we last checked in. We are about 3 weeks on this podcast. I lost my voice. We have other jobs that just got us delayed, but we're here now. And as of October 8th close, the portfolio combined, we have 34 buy recommendations. They had returned 1,900% as a group. That's about 56% per recommendation. The portfolio is up a little less than $150,000. So Austin, it just continues to be a situation where there's a lot of growing kind of negativity around AI. And that's understandable, again, because as you noted, many of these deals are, what's the word? It's incestuous. It's it's like I've seen people talk about like a power cord plugging back into itself, right?
Right.
NVIDIA is going to give $100 billion to OpenAI, which they'll use to buy NVIDIA's chips. We are seeing a lot more of those kinds of deals being struck right now. So I am entirely sympathetic, and we're going to spend a lot of the show talking about these deals to people that this is kind of raising their hackles a little bit, making them wonder if we are in a bubble that's kind of reaching its pinnacle here. Now, that being said, beyond that, we see a lot of days where you see people getting out of risk very quickly one day, and then the next day there's a new headline where all of a sudden the market's kind of returning to new highs. So overall, it continues to be very frothy, right?
It is, and I want to put a little bit of voice to some of the concerns that people are seeing, and then I'd like you to talk about the specifics that are leading to that. So maybe go in reverse order here a little bit, but it's a little dizzying right now. And you talked about the power cord plugging into itself. I've also seen this referred to as the Ouroboros economy, right, which is like the snake that eats itself, and you're not sure where it starts and where it ends. It is a little confusing, and there's major concerns now about what's called circular investments, and these rhyme with the dot-com bust and vendor financing and what happened in that era. And just one example of sort of companies in this, what was sort of this self-funding enclosed cycle where, revenue was going from one company to the other, and then those companies were trading at a multiple of revenue so they could raise more money and then use that money in the infinite money machine again. Is in the dot-com bust, there were advertising barters with portals like Yahoo, where companies would exchange warrants for advertising without revenue changing hands. There were a lot of other versions of this, but it all comes back to concerns about circular investments that rhyme with the dot-com bust and vendor financing. So I think that there is definitely some validity to these concerns, but there are truly things that are substantially different about it. And we're going to talk about that. One of which is what we've discussed, I think 2 episodes past, that this is largely a cash flow funded cycle up until this point. These are companies that have real material revenue. And while there are a minority of companies that are currently deriving revenue from AI, those that are the mega tech giants who are generating billions of dollars of free cash flow and efficiency gains. I mean, look at Meta, right? Their return on invested capital has gone up from 2021 to today, largely powered by AI investments. And that's happening at other companies at scale. So there are truly different things here. There's real revenue happening. These are cash flow funded cycles. And yet the structure of a lot of these deals does need to give you pause to evaluate it a little bit. So I want to say that, like, that's why people are concerned. But now let's actually talk about some of these actual deals that are leading to that concern.
Yeah, so just I think most people have heard about these deals, but we should lay out what exactly is happening. So the big one was NVIDIA announcing a $100 billion investment in OpenAI. And it was followed shortly by OpenAI announcing a commitment to buy $100 billion worth of chips from AMD. And what does OpenAI get in return? Well, pursuant on some kind of thresholds for performance, they would get $100 billion worth of AMD stock back. So let's just dive a little bit into this. The AMD agreement would be for OpenAI to purchase 6 gigawatts of chips, and that would begin with a 1 gigawatt purchase in the second half of 2026. So you look at 6 gigawatts in terms of revenue to AMD, that's going to be estimated somewhere in the 90 to $100 billion range. As the deal scales, OpenAI gets warrants to purchase AMD stock that caps out at about $600 per share. Austin, when you do the math, it is essentially 1-to-1, right? It is that 90 to $100 billion worth of chips, and the stock value at a $600 price level would be $96 billion worth of stock. So this is essentially a 1-to-1 relationship. Now, NVIDIA and OpenAI, their deal was announced on September 22nd. And in that deal, which is phrased as a strategic partnership, and that matters, NVIDIA is investing up to $100 billion in OpenAI. And the commitment from OpenAI is 10 gigawatts of NVIDIA GPUs. So a lot of people might look at that and go, oh, well, NVIDIA is giving them a 1-to-1 dollar, if they did the math I had for AMD in the last one. But the actual math here is a little different. And for 10 gigawatts, you're talking $50 to $60 billion per gigawatt. So in terms of that build out, NVIDIA is paying about 15 to 20% in the form of, getting equity back. So this isn't, NVIDIA paying for all of this build out, but it is some portion of it. So Austin, let's just first highlight the key points, and then we can follow up with some, I'm sure you've got a number of follow-up questions here. But the key points, number one, this is now the second episode in a row where every major storyline is driven by OpenAI. Last episode,
Right.
It was Oracle, right? And also Broadcom. This episode, it's NVIDIA and AMD. But Austin, a bigger point is everything downstream in the investing space is basically coming from OpenAI right now. Taiwan Semiconductor, we've talked about them being an excellent position for any investor to add because of how they serve as kind of the original arms dealer. They're up 22%. Who's their customers? AMD and NVIDIA themselves. Memory stocks are absolutely booming right now. Austin, we talked about one of our number one trends at the beginning of the year being memory and a boom happening there. It went through a trough of disillusionment. And now as we're seeing this boom in CapEx in the second half of the year, memory stocks are absolutely taking off. Micron's up 45% the past month. SK Hynix is up 43%. And Austin, the other area that's finally getting unstuck, we've talked a lot about limiting some of our exposure to the machines that make chips, semiconductor equipment, because there was other overhangs over to that top that industry. Well, those overhangs right now are kind of being ignored because people are doing the math in terms of the amount of equipment that's going to be needed for all this build out. And we see a stock like Camtech, which was one of our recommendations up there, up 44%. Lam Research, another one of our kind of best of the best that we had selected from that industry, up 42%. So Austin, basically right now, even if you're not invested in NVIDIA, even if listeners are not invested in AMD or Oracle or Broadcom, what your returns are driven by is the ambition of OpenAI. So,
Right.
Whether or not you like it, right now your portfolio is essentially seeing its performance driven by one single non-publicly traded company. That's fairly remarkable.
And one incredible deal maker in Sam Altman. I mean, I don't know how that guy, it seems like he's in 5 places at once, signing deals left, right, and center. So, real credit to him for building a visionary, incredible company, and then also just being a phenomenal deal maker and capital raiser when it's needed. I will just say, I do have some questions on this because this brings to mind some really big questions about the implications here. This is the first moment for me where I've started to get a little concerned, not about the technology of AI, not about the investing potential, but the market structure of this just being OpenAI is this one pillar tent pole that props up, more or less this whole industry and sentiment right now. Like we need to see OpenAI succeed, right? If OpenAI has any sort of hiccups or concerns, there's no other company as consequential as them to sort of like continue to move this enthusiasm forward. And that's to say nothing of the long-term potential of AI, but I get a little nervous when one company has this much impact on investor um, optimism, energy, enthusiasm, whatever you want to call it, right? I would much rather this sort of be a industry where a thousand flowers can bloom, and really what we're looking at is trying to plant one mega sequoia tree right now. But the biggest question that actually comes to mind is how is OpenAI going to afford all of this? OpenAI is generating a phenomenal amount of revenue, but nowhere near the amount of revenue they're talking about investing, right? So we had talked in a prior episode about how we may be entering the debt fueled era of AI investment. What's OpenAI going to do here? Are they going to give away more equity, raise more debt? What do you think?
Yeah, that is truly the $1 trillion question. And it really plays into what you were talking about with OpenAI almost becoming a systemic risk to the entire technology industry. So let's just do the math here. The new Stargate build out they announced on September 23rd. We didn't even talk about that. That's another 10 gigawatts.
What's
There's
10 gigawatts
NVIDIA
between friends? I mean, my
between friends.
gosh, you could go 2 weeks and 10 gigawatts is here and gone. It's not even exciting anymore.
Yep. And NVIDIA, their deal's 10 gigawatts, which is to do self build out to essentially turn OpenAI into a hyperscaler themselves, where they're managing a level of chips on par with their Oracle arrangement, on par with Amazon, these other companies. Then we have AMD at 6 gigawatts. So, Austin, I talked about earlier, the build out cost is about $50 to $60 billion per gigawatt. So, on the low end, that gets you to about $1.3 trillion in announcements, to on the high end, $1.56 trillion in announcements. So, pretty staggering numbers right now, especially the number that's frequently cited is OpenAI did about $4.5 billion in business in the first half of 2025. Now, that doesn't tell the whole story. They are now at about a $16 billion annual run rate. They have an incredible asset, Austin, in the fact that they have an 800 million monthly active user base. You think about the kinds of businesses that get 800 million users per month. I think it would be a company like Apple, like Meta, potentially Microsoft. I mean, these are extremely valuable companies, let alone that OpenAI would have this user base for a technology as potentially valuable as AI. So the projection they're going for is to get to $200 billion in revenue by 2030. So we are a little dependent on them being able to hit those expectations. And at a $200 billion company, they would almost certainly be worth several $trillion. So, it is kind of to that level or bust. But they have some options for funding this. As we noted earlier, they got $100 billion from NVIDIA. They raised $40 billion from SoftBank. They've got a future IPO, which can raise proceeds from there. And we talked about debt earlier, Austin. The deal with Oracle, one of the advantages of that is it puts the debt on Oracle's balance sheet. They kind of pay a yearly lease, right? They can directly raise debt from other sources. But again, the short answer is essentially right now, this is an all-in bet by everyone involved here, especially Oracle, that OpenAI is going to get to $200 billion by 2030 if they're going to start affording some of this annualized capex that's kicking in. So I've seen, Austin, maybe one of the reasons they're striking all these partnerships is in a way to make themselves too big to fail and to be a systemic risk where everyone is invested in their success. I don't think that's the answer, but there's definitely something there that rings a little true right now, that we are entering a space that for a lot of the valuations of these companies, they are in one way or another dependent on OpenAI's success to pencil out.
Yeah, I mean, OpenAI is the tent pole that seems to be propping up this industry right now, and I'm having a hard time parsing those deals that make strategic sense versus those deals that make political sense versus those deals that are deals of convenience. And let me like let's everybody is now working with everybody. OpenAI is doing GCP for GPT, and then you've got OpenAI working with both NVIDIA and AMD and Oracle, and like everybody is working with everybody in some fashion here, where people are frenemies. I don't know what you want to call it, right? Frenemies, competitors. Everybody's in bed with each other. So I'm having a hard time parsing those deals that are just for political reasons, right? Like the NVIDIA investment in Intel following on the federal investment in Intel. And I'm curious, how big of a deal is OpenAI investing in AMD? And is this the beginning of NVIDIA facing some real threats? Because it's hard for me to tell if this is just more deal making for the sake of deal making, or if this is actually strategic. Like some of the Intel investments have just felt like just kind of throwing a bone out there. You know what I mean? And I
Yeah.
can't tell if this is that for AMD or something else.
Yeah, it feels like a lot of people marrying their first cousins right now. I think, that's my second incestuous remark. That will not go in the headline. Last week, we did not use the headline. That was not Game of Thrones. That one will not. But it is a lot of this kind of self-dealing that is this tangled web that's really hard to unwind what the motivations are.
Exactly.
It's interesting, Austin. The announcement on the AMD deal from Sam Altman, I've got right here. He said, excited to partner with AMD to use their chips to serve our users. This is all incremental to our work with NVIDIA, parentheses, and we plan to increase our NVIDIA purchasing over time, end parentheses. The world needs much more compute. Now, Austin, what I think's interesting about this, he mentioned AMD once and NVIDIA twice in his announcement about using AMD chips. That is
Right.
hilarious. Austin, a lot of people have been talking about Jensen Huang, the fact that everyone in the industry is so terrified of him because they need allocation to his chips that they have to ring him in advance to let him know about any plans that they have, or else
Right.
they risk getting cut out. And, it sure looks like the mafia boss is holding court right now with a quote like that, where in your announcement for AMD, you mentioned them less than
Right.
NVIDIA.
Don't worry.
Uh,
Don't worry. We still got a good thing going. This is just right. It's not what it looks like. I promise.
and Jensen Huang's quote about the deal too, that was, I took this down. He said, it's imaginative, it's unique and surprising considering they were so excited about their next generation product. ... I'm surprised that they would give away 10% of the company before they even built it. And so anyhow, it's clever, I guess. Man, talk about just like patting the little kid on the head. Good job
Yeah.
getting that walk there in your coach pitch game, Slugger.
This is about as barbed as Jensen Huang has been, and he hasn't needed to be critical of anybody in the last decade, right? Or let's say 5 years specifically. He's like one of the most powerful men on earth at this point. He said he's the global mafia boss, but this is about as chilly and negative of a statement I've ever seen him make. And this is a guy who's incredibly deft and complimentary to everybody, including Intel, right? I mean, he is very good about talking about this being an industry that we all participate in. And yet in just a couple lines, you can see he doesn't like this one bit.
Yeah, no, it's quite clear. Austin, the big picture is there's a strategic background for all these moves. You think about NVIDIA partnering with OpenAI. Number one, they want to get equity in a company that could be worth several $trillion, right? So there's that aspect of it. But this partnership beyond the numbers is also it's a self-build partnership, which we've talked about. NVIDIA's moves, especially in our Neo Cloud episode, if people went a couple episodes back, I believe it was, that they have worked really actively to not be entirely reliant on 3 customers. So they've been trying to create more companies at this hyperscaler scale. So doing this self-build arrangement with OpenAI, it allows them to get involved with parts of the value chain they're not currently involved with. If you go and you Google extreme co-design, you'll get an NVIDIA presentation where it talks about how they're trying to go deeper into something they call extreme co-design of AI factories. And the concept here, Austin, is going further and further along the value chain of what they are going to provide for their customers. And that's why we've talked about them being kind of the Apple approach, where it's a big system with networking, and they're increasingly developing so many more aspects of the data center, whereas the custom compute side, That's more of like your Windows approach, where, you have a much larger kind of grouping of companies handling more discrete functions. So, Austin, this is a very beyond the fact, the uncharitable reading of this would be NVIDIA is simply funding OpenAI so that they can buy their products. As I noted earlier, they're funding 20% for this particular instance. What it is allowing them to do is going very deep into trying to create more ways to approach their greatest weakness, which is allowing them to do this extreme code design. Now, for AMD, they've been focused on the opposite problem, where they're basically just GPUs, and they want to get into larger systems. So a partnership with OpenAI, well, Austin, the easiest analogy, it's a mall getting an anchor tenant, right?
Mm-hmm.
You can't go out and build your mall often until you have, that company that's going to take up a huge amount of your space and also create the foot traffic to go out and, secure the rest of the mall, right? So by them being partners with OpenAI, they have someone who's going to buy the 6 gigawatts of capacity. They're going to be able to work through how to scale AMD's products because they've got a lot of gaps. They've got gaps that they don't have the networking that NVIDIA has. They're working with broader partnerships. They did a major acquisition to be more of a systems company recently. And this partnership will allow them to essentially blunt many of their greatest weaknesses. For NVIDIA, what's interesting, Austin, when I talk about them wanting to do this extreme code design, they are trying to blunt the threat of the custom competitors. It lets them get in and take away the margin from hyperscalers and ODMs in some of these areas. For AMD, with this partnership, they are concerned with becoming NVIDIA's primary competitor. Because right now, the question's been, who's NVIDIA's competitor? Is it AMD as another company selling GPUs, or is it custom chips? So far, all the revenue's been going to custom chips. What AMD wants is they are actually the primary competitor. But now, Austin, the bottom line in all of this, NVIDIA is still in great shape. If someone's looking at this and saying, okay, AMD just did this deal, it looks like they are catching up with NVIDIA. Here's the numbers. Austin, in one of the first episodes of this podcast, I did a segment, how NVIDIA could do $5 in EPS. It's our number one performing YouTube video. It's been watched by more than 10,000 people. And I broke down why the street's estimates were too low, and I thought NVIDIA could get to $5. That was a very bold call at the time. It was significantly above Wall Street. I saw an upgrade today for NVIDIA calling for $8 in EPS in 2026 and $11 in 2027. Those numbers were unfathomable to anyone when we started this podcast a year ago. And now we're seeing those calls on Wall Street. So, if you're looking at this news and saying, should I sell my NVIDIA? Is this a complication? The reality is the news has gotten so much better for NVIDIA in recent months. It's borderline staggering, and it's hard to even take stock of it.
Eric, do you want another attaboy and flowers here? Your portfolio is already up 30%. I'll give you credit for calling the NVIDIA $5 earnings per share as well. All right, you did it. You're amazing. That's why we do this podcast. So here's your additional recognition. Well, okay.
Never did get my last flowers, you promised. So
that's right. I missed our anniversary. I'm sorry. You'll get chocolates and flowers on the next one. So since we're talking about predicting the future and being in the oracle of AI here, I'm going to get that one to stick. What stocks beyond the obvious names like AMD could see the biggest gain if all these data centers get built? And you've had really wonderful sort of picks and shovel data center exposure in the portfolio. You've got interconnects and cooling, and you've been pretty well allocated in that space. So I really want to hear your recommendations for what names could see the biggest gains as these mega data centers get built out. And we continue to hit this order of magnitude scale that's just like blowing past all prior high watermarks, even from 6 months ago.
Yeah, I mean, that's a great question. Everyone's going to look at the headlines, and there's going to be some hidden winners that haven't gotten the recognition from the market, but that should come to bear in the months and years ahead. And I do think there are some. Let's start with memory. Austin, I'm not asking for more flowers here, but I will once again mention In the first podcast of the year, we had said memory was a trend that we felt most strongly about, specifically the growth of high bandwidth memory. We had made recommendations in SK Hynix, Micron, and Camtek specifically for that trend. Now, what we saw in the past couple of weeks, we didn't even mention another massive announcement from OpenAI, which was SK Hynix and Samsung joining the Stargate Alliance. And what's happening is all these announcements, the amount of high bandwidth memory embedded in these systems is just incredible. So as you see all these gigawatt data centers announced, 26 total, if that were to get built, it's just unbelievably staggering for the growth of memory itself. And beyond the stocks we've talked about, the best performers are across memory. NAND, SanDisk is, I believe, the last quarter, the best performing stock. Companies that make disk drives, Seagate, Western Digital, just absolutely going crazy right now. So,
What's
these
old is new again. What's old is new
I
again.
know. It's funny. We did a live blog on Seagate where I was talking about them on 24/7 Wall Street. And just again, one check. This earnings season, it's starting up right now. We are going to be doing live blogs on every single major company. I'll talk about one. We did one on Seagate. We only got maybe 100 readers on that. And I was kind of stupefied by it because it's a company that is potentially vastly interesting to AI, and the fact that no one was checking into that. And since that live blog, I think it's up several 100%. So, it's an opportunity to discover a lot of these different niches that, investors might not otherwise be seeing. And we put a lot of work to feature those directly. That if you go to 247wallstreet.com, right after the 4 p.m. close, you're going to see all the live earnings that are on the site. So, if that's not part of your routine, I think everyone who's listening to this, if you enjoy this podcast, you're also going to like our live earnings coverage. All you got to do is search 24/7 Wall Street in Google, and you're going to be able to go to our site and find those at the top. Now, another thing, Austin, we've talked about in this episode is the fact that NVIDIA is pushing for this extreme co-design, capturing more of the value chain. Well, if AMD is getting a lot more sales than expected in recent years, they don't capture as much of the value chain. So they're involved with something called UA-Link, which is a consortium essentially created to combat NVIDIA's networking. So, Austin, I think you look at benefits to a company like Broadcom, and also some niche networking plays. Astera Labs would be a name that is a logical beneficiary. But I will do a tease. I think my top beneficiary of this, we're going to make a portfolio buy today. So I'm going to let you tee this one up, Austin. I'm not going to keep blathering.
Let's do it. Let's do it. Everybody wants to know what the Oracle of AI is buying next, and I'm going to keep repeating that until it sticks. Eric, I'll get you a plaque, shirts, whatever you want. So you're making 2 buys today, and I'm curious: are we doing any sells to fund these buys? What's the structure here and the impact on the portfolio?
Yeah, you keep saying this Oracle of AI. I'm like, is he talking about Warren Buffett? I don't know. We might need to work on this one. But no, we're not going to sell today. I will say, you've talked about how one of the reasons our performance as far as dollars doesn't match up to the recommendation, the average recommendation. One reason is because we had taken our cash and we had parked it in both Meta and Amazon, saying, hey, we would rather have this invested than in cash. Those stocks have actually dragged the portfolio down. I should have left in cash. It's even worse than cash drag. Total mistake. I do think that Meta right now has some unique angles on it. And, we'll talk about the release of Sora, but some real negativity cycle that could be approaching the stock. So I think I will be selling that stock, selling down some, which was always the intention, sooner than later. But these will be able to just finance with cash. And the first stock I'll talk about today, which is BE Semi or BESI, we will actually not be purchasing directly, and I'll explain why in a moment. But this is a stock that trades on the Amsterdam Stock Exchange. It does have an OTC that's listed under BESIY. I wouldn't really recommend buying there because the volume is relatively limited. Its returns do slightly track above the underlying equity, but there's not a ton of liquidity there. So I think if you want to buy the stock, the best way to do it is to buy the international listing. Now, Austin, the headline for BESI is that it's only up 6% year to despite some really tight connections to trends that should accelerate in the years to come. One topic I just talked about a minute ago is high bandwidth memory. The innovation there is stacking memory chips, and you've got a low TSV that comes down and you connect it directly to the processor or the logic core. And this is how we're getting around some fundamental limitations in memory. Well,
I mean,
there's a lot
correct
of
me if I'm wrong.
oh,
This was one of the biggest breakthroughs that made Blackwell such a compelling product, right? Is the integration of high bandwidth memory or no?
well, yeah, I mean, we will have had high bandwidth memory in other systems, but again, the bill for any of these cutting edge, systems is going to be a lot of high bandwidth memory. That's true of
Right.
AMD systems as well. But Austin, the limits of semiconductors. So another area that we're looking at them is kind of how you get around some of these solutions where, for chips, one area to be able to make better chips was simply making larger dies. But, we're hitting limits on this. It makes the chips more expensive. It makes development more expensive. A solution to get around this, Austin, is to create chiplets. And you essentially allow smaller chips to work as a monolithic system. And the primary technology that's allowing this is something called hybrid bonding technology. And it's something Bezi itself is an early innovator in, and I believe the technology leader. Now, who uses hybrid bonding? Well, Marvell uses it in its chiplets. It's reported that Broadcom, with their OpenAI custom accelerator that's coming out, will be using chiplets. But the most aggressive buyer of chiplets has been the company we just talked about getting this massive contract,
Mm,
AMD,
mm,
right?
mm.
And so the fact is, AMD, this hasn't been a stock that would have been something that was an accelerant since March 2024 until right before their announcement. AMD stock during that period when all the other AI stocks were going crazy, it was actually down 24% in that period. So what you have is Bezi, even though they have this innovative technology, their primary customer is AMD, so their narrative's extremely poor. Well, what's changing, Austin? The what you call micro bump pitch for hybrid bonding is about 5 times smaller than other bonding technologies. Well, to date in memory, for high bandwidth memory, it hasn't required this level of complexity, but that's starting to change in the second half of 2026. And by 2027, you should actually see a massive ramp, I believe, of this hybrid bonding technology going in for this massive push in high bandwidth memory that, once again, we've talked about how underestimated this has been and how much growth there could be. So, Austin, the bottom line here is that, number one, this company, just from their relationship with AMD alone, is probably going to see sales far above consensus. But then you see a second catalyst on the horizon, which is the fact that we're going to see a lot more use of its technology in high bandwidth memory. So, I believe I talked about last week, someone had asked a question of what are some trends you look for? And I said, I think knowing how architecture works before it sees revenue flow puts you at a substantial advantage, because once the narrative begins on the increasing sales growth, a lot of people begin understanding that story and pile in. I think next year there's a lot of reasons. Second half of the year, AMD seeing this first gigawatt deployment. Second half of the year, their technology becomes applicable to HBM. So here's what I'll say about this. We're not going to add this to the portfolio. We're going to treat it like SK Hynix, where we track it as a recommendation, but we're not going to buy it because I know it's difficult for a lot of people to buy international stock. So
Right.
I've talked with people, a lot of people have emailed us about buying SK Hynix. It's done wonderfully. I think it's about a double. So I want to get this information out to people. I think Bezi's a fascinating opportunity and a great stock. I personally own it. I will personally add it more. And if you're thinking of how we would put an allocation towards this in the portfolio, we would approach it like a $10,000 buy or 2% allocation, which is above some of the smaller speculative things we do, but not quite a core position. So that's how I would treat this stock if someone's adding it to their portfolio.
Boy, I like this pick a lot. This is definitely a skate where the puck is going. Looking ahead to the gigawatt build outs and the fact that AMD is maybe now, flush with cash and looking to go big, and the intersection of them being the primary customer and flush with money, flush with the ambition, and the combining that with like the direction of high bandwidth memory here. So really love the narrative, love the convergence, love looking ahead here, which is it it can be challenging to do in a space where everybody's just doing more and more and more. And you think that the investments that will make the most sense as these data centers get bigger and bigger are the ones that have already grown in this first wave. So I really like trying to find something that actually is well positioned for the next wave that might not have been as
Yep.
relevant in the first. Really, really good research there for our listeners.
And it's nice to get some stocks in your portfolio that aren't up, right? 200% in the past. We've got one next that's up 200% recently, but it does provide some de-risking that you're not getting something that's seen that high of level of returns recently.
Right. Great digging there, Eric. I love this one. I'm sure you turned over a lot of stones to locate that one. The next one has been a great performer. And I think the implication that this or the role that this plays in the data center will be obvious when we say the name of this, right? Which is Power Solution International. This company helps deliver the power, that makes all of this industry possible. And when you distill all of this down at a fundamental level, and you sort of go all the way down, you get to a point of realizing what are we really trying to accomplish with AI, and it's how effectively can you deliver and harness power and compute, right? That's what all of this is. More
Yep.
powerful chips and more powerful data centers and cooling. It is all about aggregating electrons and directing them towards a goal. So, what role does Power Solution International play in the stack here?
Yeah, and we've talked about this stock before, so there might be people listening who had already bought it. Eric Jonesa, who we had interviewed, I believe 2 or 3 podcasts ago, he highlighted this as a stock to be interested in. Where we first highlighted it was our YOLO episode on August 1st. Everything from that episode is done really good. AAOI, which we featured there, is up 51% since. Applied Digital from the Neo Clouds is up 123%. Ouster's up 45%. Power Solutions is the one that's been lagging this group. So, I know it's a little counterintuitive for listeners out there, but you talk about stocks with similar characteristics and ones behind the group, it often makes you more interested in that company from today. So I'll explain why it's been trailing the group shortly, but we wanted to be opportunistic because the stock had fallen into the low 80s. As is classic, it's kind of rallied the past few days, so it's back into the mid 90s, but I think it's still a good deal here. Personally, I'd first purchased the stock on March 25th of this year for a cost basis of $31.05. So, you can see some of the recent gains that have happened from it, but the pitch is pretty simple. It's effectively that the market that this company operates in has fantastic long-term demand dynamics. They're off the chart. And this company is not that expensive, I think in large part because it is so small and under followed. So, Austin,
I mean,
Power
just
Solutions.
let me
Sure.
put that into context. This company is up over 300% in the last year, and it is still a $2 billion company. So that is
Yeah.
the size of what we're talking about after a 300% rally. Boy, thank you for
Yeah.
the March 25th text telling me to buy this. Just kidding. Where I would come on. You got to share those with the crew here, man. I would love to have
All
had that
right. All
$1 billion
right.
cost basis. All right,
Well,
but keep going, keep
we'll
going.
get more yellows flowing, but no, Austin, I think at the end of the day, they've got several segments and they've got infrastructure, they've got transportation equipment, but what we care about is the power systems, right? That's what we've been talking about in many podcasts. And there's specifically a lot of demand for generators that can allow data centers to be not entirely dependent on the grid, with demand for power exceeding our ability to supply it for years to come. That creates a ton of demand for their products. So we look at the sales acceleration. It's pretty remarkable. 9% 4 quarters ago to 38% growth to 42% growth to 74%. So that's gotten them to a point where last quarter their run rate was at about $130 million in operating profit. They're valued at $2.2 billion total as of our filming, a trailing P of 19. That would be reasonable, Austin, if we were at a peak, right? Everyone's always looking. Some memory was cheap at the end of the year. We said, well, it's cheap because a lot of people think we're at the peak of the cycle. We actually think the cycle is going to stretch a lot longer. And that's our non-consensus viewpoint, why we think there's a lot of opportunity. We've been proven right so far. I believe the same thing. They've got a lot more growth than anyone expects. I think they have a single Wall Street analyst even covering them who's projecting 20% growth next year. I don't think they're going to decelerate that fast. And it's because this data center demand continues to be dramatically higher than supply. You look at generators as a whole, every megawatt, they get about $800 million in business. We talked earlier about OpenAI's, 26 gigawatt ambitions. So the inflection point of, where they're going to be able to keep growing, I think only gets more steep in the next few years. Now, Austin, why are they trailing some of the other competitors? Well, we talked about the other stocks from YOLO being up a lot. Well, they're kind of down. It's because they had a former majority owner who's been selling off their shares in the company, which is kind of, the price of a stock is supply and demand. And it's created a lot of selling pressure on it. So I don't think it's been anything operating. It's been an external factor of that owner dumping shares into the market. So I'm using this as an opportunity. We're going to add $5,000. Again, it's small. It's speculative for that reason. I don't know if they have any particular advantage over rivals, but they are cheap as they're valued, and their product has such insatiable demand, the industry should be constrained for years to come. So, also, I really like the opportunity for this to go over 100% returns in the coming years, right? I think it's a excellent way to diversify your portfolio too, away from, if you've got chips and other things, be able to get something in this kind of power chain. So I think people who are listening to the show should definitely consider adding this one.
I love it. And so just to recap, you're adding a $5,000 position, which is where you typically put your sort of smaller, more volatile positions. And that makes sense given the size of this company. But this need is obvious for data centers to have their own distributed on-site power, and power has been the bottleneck. And I've seen people talking about Generac as a play here. That's a larger $10 billion company. If people like this idea and they think that thesis has room to run, maybe do some research on Generac. I've seen some people talk about Cummins as well as a player here, as a more established person in this space. Personally, I like picking the smaller company that's got more room to actually grow into this, which is Power Solution International. Generac also has a residential business, and Cummins has a trucking business as well. So you're not getting as pure exposure there as you do with a power solution. But if you believe in this bottleneck, those are additional companies to look at that also have established business lines that might be less volatile. There's a private company as well. I think it's Generate Capital plays a role here. That's a really interesting one to watch. But fundamentally, just like this role of giving data centers their own independent power and backup is to solve a local bottleneck, I love. So $5,000 position in Power Solution International. There you've got it. And that is the second quasi buy in the portfolio today. We'll call them the recommendation. Thank you for that, Eric.
We'll call it.
Yeah, recommendation. Yeah. Even though we're not going to be buying one, that does not reflect on the conviction in the recommendation here. Eric, there's other AI news out there for us to talk about. Do you want to do a little bit? Do you want to do some quick hits, or do you want to save those for another episode?
We'll just lightning round it. We'll do 1 minute each.
Okay. OpenAI Sora 2. This is following on Nano Banana. It's following on Meta Vibes. I personally use both apps. I'm not sure if you had a chance to give them all a go. I think some people are actually kind of misreading this, but Sora became the #1 app in the App Store. It's an absolute banger success. Nano Banana was hot, and then Meta Vibes had like a 24-hour, flash in the pan, and then Sora 2 was just coming and stomped all over it. I'm curious what you saw and what your reactions are to this enthusiasm. I think it might be being a little misread, but I'd love to hear what you think.
Yeah, I download Sora and the app, but the conventional thing to say is AI slop. It's actually really compelling knowing it's at like a V.01. I was kind of astounded how fun it was. So I think there's definitely going to be a place for this, and you can see how it unlocks creativity. The other thing also, and then I'll get your take on what you thought. OpenAI, we we already did half a show about them, so I don't want to talk too much about them. But they did their developer day, and they released a few interesting things. Instant checkout, I think eventually them getting to 200 billion requires getting more into this kind of affiliate, taking a cut off online purchasing, which is effectively Google's business. And they also released Agent Kit, which is going to, a lot of the studies that have said why companies aren't properly using AI is because of the complexity of the operations. Agent Kit, it's a tool to make deploying agents significantly easier. So I think that's not something anyone should ignore either. So beyond the announcements of funding, just an incredibly active 2 weeks from OpenAI.
Yeah. These video apps are so impressive. And I mean, Sora too, Sora's just incredible. It's got a different vibe than Meta, or, forgive me, than Meta vibe. Meta's version of this is a little bit more fantastical, right? It's like raccoons on rocket ships, and Sora's a little bit more real life. Neither are personally compelling to me. And I hear a lot of people saying, oh, it's AI slop and I would never engage with this. But I think this is just a PR masterstroke. I think this is just a demonstration of abilities. I don't think the end goal here is these apps by any means. I think this is just free PR, and it's showing the capability of what these engines can do. And you got to be thinking this is a bit of a AI moment for Netflix, right? As you start to unlock and democratize this sort of creativity and video generation, what does this do to Netflix? Similar to how Google was kind of caught flat-footed in the AI race and had to catch up there. I wonder if this is that moment for Netflix. So incredibly impressive technology. I personally don't find the apps compelling, but I think what the capability they demonstrate is absolutely remarkable. And you have to look at it as a product demo, not as an app where the app is the end state in and of itself. That's just my take here. Let's move on here. We said we were going to try and keep this quick to a lightning round, though. Talk to me about Oracle losing money on NVIDIA chips. I mean, there is not Larry Ellison is not afraid to make big bets. He's bet the farm many times and it's worked out in his favor. But what's going on here? Because there was sort of a brief panic at this moment.
Yeah, this was a news story from The Information. It was, in my opinion, very poorly reported. Basically, they said of the first 900 billion worth of Blackwell GPUs, they got financials that Oracle had 16% gross margins and was losing money. Now, Austin, it should be fairly obvious to listeners out there once you hear it that once a new technology comes out, your lowest gross margins are when you're first deploying it, right? Because they're getting the chips, not all of them are actually deployed, so you're not making money off of it. You're going to get better uptime and economics as they go. In fact, I think the bigger news this week was some data out in Amazon increasing pricing on Blackwell GPUs and some data out in terms of pretty compelling pricing trends for 5 or 6 year old GPUs, which says, hey, maybe depreciating these, they won't be as valueless as bears say. Sometimes I see a story like this and it's helpful, right? It's perfectly fine to be bearish on AI. I'm bearish on certain aspects of it, as we've, talked about in recent episodes. But when that account initially grabs a headline this poor and says, see, I told you so, it just shows they're not applying any critical thought to anything. This was one of the most clearly BS stories. We made fun of all the BS stories at the start of this year, and we were right. And that was even hard. It's shooting fish at a barrel. This one was shooting fish at a barrel. Just bad on the information. Poor overall. This is nothing burger.
Wow, how do you really feel about it? I love that. Eric, our goal is always to come in under an hour here. I think we've packed a lot into this one, and we're closing in on minute 50. So one last thing from us to end the episode. Thank you for the buys. Thank you for putting all this in context, the AMD deals, the OpenAI, many deals that are going on. Last thing for me, thank you to our listeners. Thank you to everybody who watches and consumes this content, whether it's in podcast format or on YouTube. We really appreciate your time. We don't have ads on the show. We do this in our spare time, and we ask that you maybe tune into us on YouTube, follow us on Spotify, follow us on Apple, on iTunes, if that's where you find us, and leave us a review. We love to hear from our listeners. We love to get comments from you. Eric, there's one comment in particular that really warmed our hearts. I'll leave it to you. Leave it to you to read it, because it really, I think, reflects well on you.
Sure. This came from Tom Waterbury, and he has name publicly on the post. Otherwise, I won't say it. But he said, I'm an avid podcast listener, and this is easily my favorite of them all. Eric is incredibly knowledgeable about the AI space, and presents information in a clear, interesting, and humble way. Austin is an excellent navigator of the dialogue and quite knowledgeable himself. As an AI investor myself, this podcast is man from heaven. It's only flaws that doesn't come out enough. That one stings on a week we're maybe getting a little later, but fair enough. Truly great
Thanks for
work.
twisting
here,
the knife,
guys.
Tom.
I can't thank you enough. Now, the only thing I just wanted to say is, Austin, being in an online medium, often, the discourse of how people approach things, it tends to not be as personal, and just seeing, like you said, seeing a comment like that, I did point out, not to tune our horns, but just say, being able to make this connection with people and have things that honest, it's just beautiful to see, and it really helps us continue doing this, and it means a lot. And we've said there's a lot of ways that if you are enjoying the show, the fact that we don't have ads, you can give back. It's to write a review, it's to simply go to 24/7 Wall Street. But we started this show as a community because we're business owners kind of confronting the fact that AI has massive implications for our business. And a part of it was how I thought there was this Pascal's wager of sorts of trying to get more people interested in AI, for deploying capital in cases this disruptive, as I thought, idea for the world. So, our hope's always to do something that bettered people, to build a community. And when you see things like that, I know it's tough to go on the internet and go out of your way to be complimentary. The internet encourages other factors, but when you see it, it really does, it warms our hearts. And I just wanted to say to Tom a very heartfelt thank you for that. It really means the world to us.
Beautifully said, Eric. Thank you so much. And Tom, thank you for the comments, and we will see you all next time.